All right, welcome everybody. It's Doug here with the LincolnList.com. This is the stock market recap and weekly review for the 20th of July. I hope you're enjoying your summer. I hope your trading is going well. As always, if you need help with your trading, you're looking to take out some of the drama, some of the up and down P&L, the roller coaster lifestyle, and be more consistent with your trading, visit the LincolnList.com. Take a 14-day free trial to the live trade room. Only 8 losing days this entire year. So again, if you're looking to build consistency, LincolnList.com. See us trade live in real time on screen. We'll talk a little bit about the spine. I think if you're really new to trading, you've learned a lot here over the last couple of weeks on how crazy this industry can be and how most of the stuff you hear is BS. A couple of weeks ago, you would have thought the world was going to end. You've got Greece riots. You've got China tanking. The SPY is starting to break down to some very important levels. People are calling for corrections. Next thing you know, week later, here we are back up towards the top of the channel, testing highs. And I think what I'm trying to say here is that if you have a need to try to justify everything that you see in this market, or you try to make sense of everything that you see in the market, which is something I tried to do when I was a younger trader, you're never going to make any money because, to be honest with you, the market doesn't make sense. Stock movements don't always make sense, and that's what's crazy sometimes, and that's what hurts the ego for a trader, is because they have that need to be right. They see something and they feel like, hey, everybody in the world should see this company is worth X amount of dollars. This stock shouldn't be going down. The market shouldn't be going up. This stock shouldn't be going up this much. It doesn't make sense. But you know what? That's trading. It doesn't make sense, and that's why it's always so important. You've heard the saying before, trade what you see, not what you believe. If you let your emotions and your beliefs and what you think should happen get in the way of what's really happening, that's when you get smoked. So kind of keep that in mind. I think you really saw that here as a SPY. As I told you a couple of weeks ago, or the last few weeks with this, you have some internals that are working. You got other stocks that were going up while the market was going down. You got this thing bouncing off nice technically. Now we're putting up into this level, and I'm really staying consistent with what I've been saying with this market. If we make new highs, we might see a nice run into 215. No bearish thoughts for me until we start closing down below the 203s and 204s. You see how it held there real well. A week later, after the doom and gloom, as I said, we're right back up here to highs. So are we going to see them? I have no idea. We may continue to trade within this channel. We've been stuck here really since November, but nonetheless, no matter what the market decides to do, there's always great stock and great stock movement. So we're going to take a look at a few of these that I think we can make some good work of here. OPHT is now on the list as a possible short. I've got to be honest here that, there's a time when this particular high RSI trade worked a lot better than it has been over. If you get in the biotech sector or other sectors like that, they can just be tough shorts, even with overbought indicators, even with high RSIs. Like I told you about trying to make sense of things, some of these moves don't make any sense at all. Some of these companies are making these offering prices that are very, very generous. It kind of reminds you of the dot-com days a little bit. So trying to make sense of some of these, you just can't do that. You just have to trade it, and trade it the best you can based on what you're seeing here, reading the tape, looking at the charts, and controlling your risk. I like this as a short, but what I've seen with 87 RSI, or really parabolic stocks, is that they're just not rolling over that easy. In a case like this, I think if the opportunity arises where the day starts with the parabolic and you move into the lower 70, like a 71 or 72 dollar hit here, I would probably take a shot here using the very first pivot. I just wouldn't go into the greens in the morning like a legend or something like that. You would just get killed doing something like that, or a rare, for example. I wouldn't do that. I would wait for some sort of pivot where you could control that risk. But I think after you see a move that goes from 54 to almost 71 or 72, if you begin, you'd have to begin the day that way. That would make it a short. Daily chart-wise, you'd be pushing really close to a 90 RSI, which is pretty high for a daily. We see more and more of those now, as I said, but I would like this. It's a really huge day that it had. Could possibly be a blow off top. I would like personally to see a little bit more, because walking in front of these lately, example, rare. I've shorted this a few times, and it's still on the list as well. But you can see from the chart, yes, you've been able to pull that move off, but it's not been maybe as easy or as nice as you would, or smooth as you would have thought. I shouldn't say the word easy. I should say smooth, because a lot of times they'll roll over. You had a couple of days here where it did kind of flush out, but still, yet to even finish red. It just keeps bouncing. Having said that about these bounces, you have to be careful because if a stock like this pulls back a little bit, you can't chase into that short. That's just a no winning game right now because you get into that short, you just get sucked down in the hole there. Next thing you know, the thing's ripping and everybody's covering and it's creating yet again another squeeze. Don't chase. You've got to go into some of the upper paras or some of the highs. If you don't know what that is, then you need to be in the chat room so you can see it live and screen on how this is actually traded because just because it's up a lot doesn't necessarily make it a great short. It's got the possibilities, but there's a few things that have to happen. And I think that's that way with every trade. You have an idea and it has to work a certain way. Otherwise, you're really just not interested in the trade. So there's all these possibilities that we come up with, and maybe only one works, maybe only two work out, and the rest are never taken. They're just a waste of your time looking. But that's what we have to do. We have to look. We have to plan. We have to strategize. Otherwise, we're just left chasing stuff all day and guessing. And we don't want to do that. So OPHT, look for a little para. I showed you rare. I'm not going to really talk about that one too. Another huge chart, 7 straight up days. Big offering on it was very, very generous for that. It's really bullish. Market's bullish. If we start hitting all-time highs, some of these biotechs and other kind of plays like that, they're just going to go higher and higher. They're going to make it a little bit more difficult to short. If they start today to flush out, you see big flushes or really big rug pulls in the morning, I'd buy those things because right now the trade has been picking those dips up because even though stocks may dip red or start the day out $3 or $4 in the hole, they usually finish up a lot higher. Not every one of them go green. We have seen some of them go green for sure, but I'd be interested in maybe buying some of those. So OPHT is definitely a short in the mind right now, but we'll see what happens with it tomorrow. Also AFMD, another pretty good parabolic here, another ramp, another nice RSI. Now this one's already pulled back pretty good. And this is what I'm talking about, is finding the pivots in these areas right here where you can manage risk at high a day and taking your short shots. And here on this final wave of the day, you really had a nice little resistance area and a good little fade. And those make for really, really good trades. You don't want to be shorting down in here. That's just way, way too late. You got to be up in here off a resistance where your risk to reward is good. Because if you get into a short up here after you've got a couple of resistance points on a stock that's in a massive run-up, if you lose on that trade, you didn't lose very much. You're not going to lose very much. If you wait all the way down here, this stock could bounce back up here and then roll over. You've got so much risk involved in a trade like that. Here you only need 1 out of every 3 to work out for you and you'll catch a really nice move. Still though, back to business. Looking at the daily, nice little wick. Would like one more opportunity to see this thing come up to this 50 moving average I have on an intraday 5-minute chart, which is roughly about 23 bucks, and just get rejected. Somewhere maybe in all of this, make a lower high and then pivot. And then once that pivot has been made, is to short into that using the high stop. Maybe it would come up here to 23.50 or something like that, a little bit further. But keep an eye on this. This is a nice looking chart as well. Not the largest in price gain, but daily chart wise, one of the things I look for here is not always just overbought, but when stocks really start to get overbought, to me it's always the separation of the 20 moving average on a daily chart. And it's not golden, of course, nothing is, but it's a good gauge that once the price separates too far from this 20 moving average, it usually becomes a pretty good short because at some point they're going to reconnect. And the only way that happens is either the stock comes back down into that level or the stock trends sideways and allows this to catch up. So either that at some point that momentum will dry up and the stock will have to go through either a consolidation period or some profit taking period. And at this point, when you see a chart that's moved this much, and really you can go all the way back here to their earnings from $7 to 21, and this has been a hell of a move for the stock since May, it's certainly due for a rest. And right now, to me, it would be too late to long it. Maybe that's wrong, but this pattern, the way this looks, it's probably what's going to happen. Momo's going to come out of it, just like some of these other ones here. We're going to look to capitalize on them. So AFMD, OPHT, and same thing here you got with the ZGNX. This is also another one here that's gone parabolic. So this melt up we've had this last week in the markets has created some stocks to go parabolic, to open the door for some possible shorts. We're going to look at some of these. As I said, just because they're up a lot doesn't make it a really good short, but there are some readings here where I think we need to take a look at some of these Monday and Tuesday to see if they'll begin Monday with some chasers. Then we can take an advantage of a move, even if it's just for that portion of the day. That move pulls back 60-70 cents basis and then rips to all-time highs again. That's fine. If we can take advantage of that, that's what we're looking to. So ZGNX, AFMD, and OPHT. I think all of these are the same kind of stock setup, and you can go back and Rare. You can put that one on the list as well. I've talked about that one before. Ardus, RDUS. Same kind of setup, same kind of theory, same kind of looks. If we can begin the day with parabolics or chasers into that, and we can reach into some nice levels, I would be interested in shorting, but only if we can get some good pivots and control the risk. Any of those that turn out to be massive flushes, for some reason we begin the day with a lot of sell-offs or profit taking, then perhaps they would turn into a nice little, maybe a nice little buy. Last, I think I'll throw a little bit of Facebook. You've got earnings coming up here in about a week on this thing. The way these have gone, we've seen these bigger named stocks run strong into earnings. I know it's already strong. For some of you who've been around for a little while, I remember just like a couple years ago, everybody was bagging up heavy shorting this thing at $19 on that major share lockup, and that's really what got this thing started. Since it bounced that day from $19, here it is at 94 a couple years later. It's yet to stop. I just think with the climate that we're in, this is just a total, this is a non-technical trade. It's more of a gut trade than a technical trade, because technically it's overbought. But what we've been seeing, the way stocks have been reacting, with earnings and stuff from Google this week, this I just think this thing's going to go to $100. You're up here in the 94s. It's like, why not? It seems like an emotional milestone here. It's this close. I would imagine that prior to earnings, this thing makes a run towards $100. Now, maybe that's not all in one smooth parabolic sweep like we've seen some of the biotechs. Maybe there's a down day here and there, a flag. Maybe this thing trends sideways. But I would look for that momentum to stay into this name. Maybe it needs a day or two to consolidate, but you're going to probably see a move into $100 prior to the earnings. I wouldn't trade the earnings. That's not my style, but I would look for that. I would look for this thing to make an attack to $100. Say the gut trade. I just think that's going to happen here. We'll see what the market has to say about that. So anyway, I'm going to leave it there because it's going to be a great week filled with opportunities. It's been a good year. It doesn't matter whether the market. We made just as much money when the market was going down and everybody was panicking about Greece and China as we did when it was melting up this week. It doesn't really make a difference. And I think what happens a lot of times with traders is they have to have a certain market. I have to be in a bullish market. I can't be in a bearish market. What am I going to do when a bearish market shows up? I mean, if you know how to trade stocks and you know how to read charts, it's going to work no matter what, because there's always going to be a bullish stock and a bearish market. There's always going to be a momentum stock. You saw like VLTC. You're always going to have some news coming out. You're always going to have a Momo player. Being able to sniff it and smell it out is great. It's going to make you money. It also helps to know how to short stocks, to look at some traders just ignore that, but ignoring it, even if you really don't want to do that, just knowing how short selling works, understanding what overbought conditions are like, is going to save you money from not walking into overbought stocks, buying it. I mean, you know what it feels like, right? When you buy a stock and you get a terrible, terrible entry. I mean, entries are one of the most important things. If you get a bad entry or you chase an entry, it's like a snowball effect. It's going to lead you to more opportunity to being stopped out too soon, to panicking on that trade. You know all that stuff. You trade stocks. You know exactly what I'm talking about. It's those little intricacies, those little small fine details is what really separates an amateur from a professional. Knowledge? No. Not really. No, I wouldn't say that, amateurs or struggling traders. If you've been in the game for a year or so, you know exactly what's going on. I mean, you know how professional traders think. The difference is all about entries, execution, management, and how you handle these trades and believing in yourself. And that's what traders really struggle with. So if you're looking to take that game to the next level, visit thelincolnlist.com. Take a 14-day free trial to the live trade room. Other than that, thank you as always for watching this video. Have a great week of trading. Take care of yourself. Talk to you soon.